Welcome to the Los Angeles Real Estate Podcast. We're all about buying and selling real estate in Los Angeles. Today, we're going to be talking about terms in the purchase agreement and who pays for what. Scott Groves from the LendLA team will be here talking about loans, and we've got 5 things you need to know before escrow closes.
So, Tanner,
yes,
we're here for another podcast.
Can you believe that it's episode 5?
I can believe it's episode 5.
Oh, my gosh.
It's been so much fun. And, I love these podcasts because I get to hang out with you.
Really, that's, I'm just here to hang out with you and CP. That's what I'm here to do.
And CP in the control room.
Nerd out about house. He's waving at us. You can't.
So, Tanner, before we get started, for listeners that might not know, we've been playing music together for over 10 years. And I was just thinking the other day about my favorite rock show that we ever did.
Was it?
Which was the show where our audience consisted of the other band touring with us, and a bartender and a door guy.
Oh, at the Roadhouse?
At the Roadhouse! And we played that show like we were at Madison Square Garden.
We killed it. We killed the Roadhouse. They literally shut it down after we left. No one else ever came to it.
They said it was the best show they've ever seen.
We used to have a live CD of that show somewhere. I think that exists somewhere.
Of all time, that was my favorite show, hands down, of all time.
That was a good show.
We gave those 2 people the best show they've ever seen.
Yeah.
And it might be because the other bands never, I don't know, did they not go to the play? Anyways, there was no one there.
Yeah.
It was amazing.
Well, this podcast isn't a Roadhouse. There are thousands and thousands of people listening, wanting to learn about real estate in Los Angeles.
We're here to teach you all about real estate. This is my personal favorite topic. I love, love, love real estate, and I want to share all this knowledge with everybody. Actually, really, it comes down to I do not have enough time to sit down for hours and hours and explain to everybody all the nuts and bolts about what's happening when you're buying or selling a house. And I think this is great. We have some time to connect. You can drive to your appointments of going to check out houses, and you can also listen to this and hopefully pick up some info.
Yeah, learn a little something about buying a house. We're going to talk about things that are negotiated in the contract.
So hopefully you've listened to all the other episodes because we've gone through a lot of the nuts and bolts about placing an offer. The contract that we use to place our offer is the RPA, which is the residential purchase agreement, unless you're buying an income property, but that's a different podcast. And the first thing, the purchase price.
How much you paying?
How much are you going to buy this house for? Huh? How much is it worth to you? That's a number, obviously, you want to talk to your realtor about. And that's the first thing on the contract. Okay, second, the length of escrow. So basically, once you put your deposit down, which is approximately 3% of the purchase price, generally it's 3%.
Typically.
Yep. How long you need before you close the deal for your loan, to all the loan stuff to get done, the title stuff to get done, for everything to happen. Generally, escrow is 30 days.
And so that's the time when your inspections are happening. That's when your loan is fully getting funded. There's a lot that happens in that window.
Right. So start to finish of the transaction, escrow. So 30 days. Sometimes in a really competitive market, we can try and be aggressive and ask for less. But 30 days is pretty standard. Something really important to know about that date, the closing date, it can move. So it's much like a due date for your baby. They'll tell you it's going to be a date. It could be a week. It could be a couple days sooner, a couple days later. A lot of things will change the close of escrow, but generally 30-day escrow.
3 other things that are going to be clearly laid out in that contract is your down payment, your loan, and your deposit.
Right. So the person that's selling the house is going to want to know how much of a loan you're going to get. So are you coming with a whole bunch of cash? Are you putting 20% down? Like I said, the deposit is 3% generally. And then how much is your down payment? So how much cash you got.
Yeah. I mean, just really the financials, really putting out the financials
Putting
out
the financials down. Now, your real estate agent will also ask you, most likely, for a screenshot of some bank accounts showing that you have the down payment.
What's the name of that document?
There's not. It's really just a screenshot. So it can be a picture of your Chase accounts, let's
your
say,
checking
or your
account,
bank
or your
account,
savings account,
or your retirement, whatever you're doing to get the money out of. We need to see, and the reason we do that is we want to vet.
Want to prove that you got the money.
Yeah, it's kind of a requirement when you place your offer. So we almost always include that. We also include a pre-approval letter from your mortgage broker saying that they're giving you a commitment based on a few variables to get your loan. And then in the contract, we're also going to put in our contingency links.
Yeah.
So if you listen to podcast number 4, we talk all about contingencies. So you should go back if you haven't listened to that.
If you're confused about that,
links.
Sarah's favorite topic.
That's my favorite topic. So that is how long you need to do your inspections, how long you need for an appraisal, how long you need to get your loan approved. So that is also in the purchase contract. Retrofitting.
I don't even know what retrofitting is.
So retro, it's like going back to the 60s and fitting on pants. No, okay, that's not what it is. That's not what it is at all. So in LA, we have something called retrofitting. Not all places in greater Los Angeles have this. Things like the water heater needs to be double strapped.
Oh,
so,
now I know what you're talking about.
Right. Smoke detectors in the house, carbon
Updating
monoxide.
almost is a way to think of it.
Yeah, it's basically they just want to make sure the house is habitable and safe. So we have and a seismic shutoff valve.
It's building code has changed over the years, and so things that were where it was perfectly legal and fine to build a house this way in the 50s, 60s, and 70s. Well, these things change over time, and our new building codes is what a lot of that is.
Right. So that's in retrofitting, and generally the seller pays for that. So when we write your contract, there's 2 little boxes, one to check for seller pays, one to check for buyer pays. Generally, I always ask sellers to pay for retrofitting. That's pretty common. Sometimes if the seller is just like super, super, super low on money, they're not going to make a lot of money off the sale. They'll try and negotiate that and fight it for the buyer to pay. But generally, retrofitting is a seller expense.
Seller's also paying for the owner's title insurance, and then as the buyer, you're typically paying for the lenders.
Yeah, so it's kind of split. Title insurance, both sides have fees for that. We already talked about contingencies for the appraisal. So who chooses the title company, the escrow company, the natural hazard disclosure company, and the home warranty company?
Who picks this?
So generally the seller does.
Yeah.
If the buyer has a real reason for using their own, sometimes their own escrow, their own title, they can ask for it. But sellers generally counter. They want to choose all these services. So it's a negotiation. You can ask for these, but generally the seller picks that.
I believe I chose my home warranty. I think my home warranty.
We did. We chose your home warranty, and I always ask for a home warranty. It's about $450 for a single family house without a pool, and that would cover your air conditioning. And I know that you were in your house not that long before your water heater broke.
Yep. I wasn't even in there. I wasn't in there a year. I know for sure. And my home warranty has covered the full replacement of my water heater. It's covered a couple like small visits from an electrician, nothing major. So I recommend getting that good home warranty and using it.
It's something that's a negotiation. Some sellers will try and counter that out, but I always ask for it. Yeah. I think it's important. Terms of the loan. So we can put as much or as little detail in the offer. With this, some sellers will want to see that you are, how much of a percentage point, if you're paying any points on your loan, what percentage rate you're getting for your loan. So terms of your loan, that's also in the contract. And really, your realtor should sit down and explain this to you. You should also really understand this from your mortgage broker. They should be sitting down and discussing what your loan terms are. But that is something we write in the contract. Appliances.
Oh, my gosh.
So are you going to ask for the fridge? Are you going to ask for the washer and dryer?
Let me tell you something right now.
Fridge.
If they have an acceptable washer and dryer and an acceptable fridge, and you're a first time person, please just ask for it. I'm the bachelor guy, and so I didn't get the fridge or the washer and dryer. And so I had to update those.
Right. They didn't have them in the house.
Didn't have them in the house. They weren't even there.
And appliances are crazy expensive.
They are expensive.
They're crazy expensive.
They're a hassle.
What I always love, too, well, the thing is most of the time sellers don't want to take them with them, so you might as well ask. Mm-hmm. And then at least you have something until maybe there's a Black Friday sale and you can get a really good price washer and dryer or fridge. Something to know about when you're placing the offer, anything attached permanently to the house is included with buying the house. So, for example, a refrigerator is not necessarily included unless your realtor checks that box. Same with washer and dryer. Now, strangely, a dishwasher would be included because it's permanently attached.
Yeah.
And sometimes, a realtor won't run this by a buyer and say, do you want the appliances? And they don't write them in, and a buyer may just assume that they're getting it. So always just verify with your realtor. Do we want the appliances? Yes. Okay, cool. Let's write them into the offer.
I actually had a TV mount in the living room that was attached to the wall, and they left it. It's right. And then I moved it, and now you don't even know this. I remodeled my living room wall, and I moved the TV mount over there. I've installed some shelves. It looks really. You're gonna have to come see it. It looks really cool.
See it,
I'll show you a photo. I'll show you a photo here in a second.
I want to see it. That sounds really fun. Yeah. So other terms too. What stays, what goes. Sometimes people will say, this is a chandelier that was passed down from my great-grandmother, and it's absolutely spectacular, so we need to take it with us. Or someone might have a lot of potted plants at the property. Property?
Property's potted plants.
A little alliteration for you.
Potentially.
So sometimes, a seller will say, oh, no, I want to take those with me. Mm-hmm. This stuff is all a negotiation. Now, as far as furniture, sometimes people ask for a house with all the furniture. Usually in that case, we do that on a separate agreement. It has nothing to do with the RPA because the bank really doesn't want anything to do with that.
The bank doesn't care about your couch.
They don't want anything to do with that. So if, say, you were moving away, you met a girl in Sweden.
Oh, yeah.
And you decided to pick up and move, but you wanted to just sell all your furniture to the buyer, you would probably just do an inventory list and you'd have a separate agreement outside of escrow. Hey, do you want to buy all this stuff? This is how much I want for it.
Hey, here's all my stuff before I move to Sweden.
With your dream gal.
Yep.
And and then we also write. So we used to have termite as part of the agreement, but we really don't anymore. So termite is something that usually it can be written into the offer, but your realtor would have to write it in. And what I mean by termite is saying to the seller, "Hey, we're going to do a termite inspection. We want you to cover Section 1 termite." That basically means anything that's like an active infestation, anything that's damaged. Section 2 is anything that could potentially be a problem later. So occasionally someone will ask for Section 1 termite to be done. If it's a competitive market and we know there's multiple offers, often we don't ask for termite because the seller just counters it out. They don't want to mess it up. They don't want to mess with it. And those are most of the things that are in the purchase agreement. Now, there's a lot more in the purchase agreement. We don't want to go over everything because we don't want you to fall asleep if you're driving and listening to this podcast.
Oh my gosh, don't do that. Wake up.
Wake up. Have a coffee. Pull over. Get some air. You know what I used to do?
What?
Is roll down the window on a cold night, stick my head out.
Oh, yeah, for sure.
Did you used to?
Oh, yeah, absolutely.
Trying to keep awake after working really late or something. Anyways, yeah. So those are some of the things in the purchase agreement. Obviously, sit down and go over this with your realtor. The funny thing is, a lot of the time, someone finds a house they fall in love with, and they say, I got to place my offer today. And the realtor says, great, when can we sit down and go over this contract line by line? And the buyer says, oh, I can't do that, but I want to submit my offer. So we just kind of wanted to give you a general idea of what's in there. Yep. You should still read it.
It's important.
Read it. So that's it. That's what's in some of the things in the contract.
I've got your buyer's tip. This is a very important one. Never say negative things about a house to the listing agent. In the LA market, it doesn't do you any good to play hard to get. This is a seller's market, and so if you're rude to the sellers or the seller's agent, they don't care.
Right. So sometimes people will go into an open house and think like, I don't want them to know how much I want
Yeah.
it. So I'm just going to say a lot
Talk
of
trash
negative
on the
things
house.
about it. But guess what's going to happen? The listing agent, if they see your offer, they're going to say, I don't know. That person didn't even seem to like the house very much.
They're going to be difficult to
They're
deal
going
with.
to end up wanting to back out of escrow. They might change their mind.
They don't
So
really want the house.
don't do that. Just be nice to everybody. That's my Canadian method. Seems to work. Be friendly. Be nice.
I say.
Be nice. Hey everyone, our interview with Scott Groves was so good and so much information. We've actually split it up into 2 parts. So here's part 1. Hey everyone, Tanner had to stop out for a minute. So I'm sitting here with Scott Groves from the LendLA team. We're going to talk all about mortgages. Him and his partner, Justin Bale, have done over $100 million a year for the last decade in loans, which is kind of mind-blowing and how much money that is. That's a lot of money.
It's a lot of loans. It's a lot of debt.
Anyways, welcome. So glad you could join us on our podcast.
Thanks for having me on.
So first, before we get started, what's your favorite color?
My favorite color is silver.
Silver. I like it, thinking outside the box. Okay, so let's get right into it. We really want to focus on, we've talked about pre-approvals, how important it is to be pre-approved before we even start looking for a house. And we talked about why it's important to use a local direct lender. Did you want to talk a tiny bit about why, say, someone should use you instead of the bank down the street?
Yeah, at the end of the day, there's a lot of great lenders, and there's a lot of infighting right now between channels, which are some of your online lenders and some smaller brokers versus the mega banks. And we fit kind of somewhere in the middle with the LendLA team, who's powered by our parent company, New American Funding. And we are a retail mortgage bank. So we're kind of between the smaller mom and pop shop broker and the giant Wells Fargo bureaucracy of maybe Wells Fargo or B of A or Chase or something of that nature. And at the end of the day, there's a lot of great lenders in every channel. One of my closest friends works for B of A and he's a phenomenal lender. But like with many things, just like real estate, being local matters. And then having control matters. So where I think we excel with our team and kind of in that localized retail bank is that we have a lot of product and a lot of bandwidth as far as helping the clients with different needs and different types of mortgages. But we're not so big where, as we've seen with anything, LAUSD or the government or these large banks, once you have so many layers of bureaucracy and middle management and just size, it becomes so much harder to be nimble.
Right.
So, I would say the brokers are some in our world right now, your local brokers are very, very, very competent, 1 or 2 man rowing boats, and there's a lot of benefits to that. You get a great workout. And Wells Fargo or B of A is the large cruise ship size, very hard to steer, but offer a lot of different stuff. We kind of want to be that middle size schooner, for lack of a better term, that can go pretty fast, pretty big, but still fairly nimble and able to move. And that's kind of what we offer as a resource in a local market. And the biggest thing that I would say about going with somebody local is, unlike maybe an online lender, which again serves their purpose, and there's plenty of great loan officers at these online lenders, is it just allows us an opportunity to be an advocate. So for example, Sarah, you and I met because I came to one of your open houses and said, hey, we might never do business together, but if you get an offer from one of our clients and you see our pre-approval, give us a call. We want to walk you through the deal and talk you through the offer, because the only way that we can really add value, since the mortgage is a commodity, is by being local and being an advocate for the buyers. Right.
No, that totally makes sense. And also, it's nice working with someone local who answers their phone on the weekend. You can get in touch. Okay, great. Well, let's go into the actual loan process. So we've spoken about what happens before the offer is submitted. Now, the biggest question I get from people when we first open escrow, they get a giant package from their lender in the mail and they call me and go, I don't know. Can you break down what's in the opening loan package?
Sure. And I'm very sympathetic. I'm very sympathetic to where consumers are in this area because a couple of things happen. During the pre-approval stage, there is really no way to do a fair comparative analysis of interest rates because interest rates change daily, sometimes a couple times a day. So you have this client who gets pre-approved with us or another lender, and then the day they go under contract, it's likely that everybody is going to come out of the woodwork. The lender that they were pre-approved with, anybody else they might have talked to or flirted with, their cousin who just closed a deal, the bank when they have to go do the good faith deposit. Everybody's going to come out of the woodwork, not to mention targeted marketing on social media and in your inbox.
Right.
They're going to come out of the woodwork to say, use me, use me, use me, because now this is the lowest lying fruit, right? You and I might have been working with a client on their pre-approval for 60 days, 6 months, 6 years. And now all of the other outlets know that this person is real because they're under contract, they're in escrow, they're going to buy a house.
Right.
So the first thing that happens that's very confusing to clients is that for the last 6 months, let's say myself as the lender, we've not been able to tell them exactly what their interest rate is because interest rates fluctuate from day to day. And we're kind of going with this, hey, just trust me.
And you don't set the rate until you officially lock in with them, correct?
You absolutely cannot set in the rate. And in rare circumstances with new construction or extended locks, with rare exception, you cannot lock in the interest rate until you have a property address, which means you have an accepted offer.
How quickly in the process do you tend to lock in the rate? After, say escrow is opened, inspections, obviously, you'd most likely wait until that's done. Within, the first 14 days, would you say?
Yeah, that's usually the case. So there's kind of two ways that lenders can go about this process. And again, like everything else in this business, it comes down to communication, right? So there is a fairly large subset of lenders that will, on that initial disclosure, on that initial conversation, they will quote the rate extremely low or maybe even lower than what the market is yielding in hopes that over the next couple weeks, the interest rates move in their favor, they move down, and then the loan officer can lock in the client at a lower rate and look like the hero.
So just to clarify, so when they get the package in the mail or, it's dropped off or delivered, they open it up and they see an estimated rate, estimated payments, estimated fees, and all of that. So what you're saying is those are kind of an estimate. Those aren't real numbers. And potentially some lenders would make those numbers lower so it looks like a better deal, but they're not real numbers.
Absolutely. The initial disclosures are just that. They're initial. It used to be called the good faith estimate, which I thought was a better term for the paperwork. And now that's all changed. And most of it goes out digitally. And most people sign this 30 to 130 pages digitally without reading any of it. But just in general practice, some lenders will estimate and disclose a little bit low to hopefully win the deal. Some lenders, which I think has been our practice here with our team, is to say, hey, Mr. and Mrs. Consumer, we're going to estimate a little bit high because things can change. The appraisal can change some stuff. Maybe we have to update some of your paperwork or credit, or maybe we're finalizing in on a program or loan structure. Let's estimate a little bit high so that you never feel like you got bait and switched.
Right.
And let's show you kind of what your worst case scenario would be. And then, we will keep an eye as the professionals on the market over the next week to 3 weeks. And if there's a particularly good time to lock in the interest rate, or if the bond market moves in our favor, or if there's some unemployment report that moves in our favor, that moves interest rates in our favor, we will go ahead and lock you in, or we'll have that conversation, whichever you prefer. Now, the interesting thing is in any given 30-day period, interest rates, even in some dramatic market shift, will only change about 1/8 to 1/4%.
Right.
So what we always like to tell consumers and people that are in the pre-approval stage is, hey, the final interest rate that you get is going to be more a byproduct of the dumb luck timing of when you go under contract versus like what lender you go with.
Yeah. Or who you choose.
Correct. And then the other thing that we talk about is like, look, even in Los Angeles where, our average loan amount on our team is approaching $900,000 because a starter home in the areas that we service, very common to have starter homes in the $1 million range. What we tell people is, look, the difference between us and another lender down the street, because you could do comparative analysis until you're blue in the face, or the difference between getting under contract today, the difference in getting under contract today versus 3 days from now or 3 days ago, wherever the case may be, that difference of 1/4%, it's going to be, $50, $100, maybe on these $1 million loans, it's going to be $200 a month. And when we're talking about a mortgage payment, taxes, and insurance of $4,000, $5,000, $6,000, $7,000 a month, if that variance of $87 a month is going to stress you out so much or prevent you from going with one lender or another lender, there might be a bigger conversation to be had about should you be a homeowner across the board.
Or you're too high on your price point.
Yeah, you're too high on your price point, or you're not looking at the tax savings. So, it's a conversation we're constantly having that, hey, at the end of the day, we get all of our business from referrals and from realtors. We want to do a great job for the client and provide them with a great rate. But this idea of chasing the, Moby Dick great white whale of I'm going to get the best rate. There is no such thing as the best rate, because if there was a company that offered the best rate, I would work there and they would do all the loans in the market.
I always say too, the time that you're delayed waiting for the rate to go down, you're paying rent probably and throwing the money in the garbage.
Oh yeah. I've had clients since 2013 through 2014 that have been perpetually pre-approved for areas that we service in Highland Park, Eagle Rock, Echo Park. I'm talking about 3, 4, 5, 6 years, we've been perpetually having people pre-approved. And at the end of the day, all they've done is lost out on 5 years of tax write-off.
And now they're probably priced out of the areas they were originally looking for. I've had some clients with similar, they come out and I'm so mad I didn't buy 2 years ago when we first connected. And it's but let's not make that mistake again. Buy now instead of 2 years from now when you're going to be paying even more.
Right. It's always shocking to me, that thought of, it's kind of like planting a tree. The best time to plant a tree was yesterday. The next best time to plant a tree is today.
Absolutely.
If this is a house that you're looking to live in long term, buy the house today, have a payment you're comfortable with, and then move forward.
Here's a buyer's tip for you. As soon as you open escrow, start shopping for home insurance. It's something you have to do anyways, and it's better to take a little time, get good rates. The first thing you could do is call whoever you have your car insurance with, because often you get a discount if you bundle your home insurance and your car insurance together. So do that as soon as you open escrow.
All right, guys, I'm going to give you 5 things you need to do before the end of escrow. A lot of these are basics, but sometimes we forget the basics, so we're just going to say them out loud. Obviously, number 5, you're going to want to get your mail forwarded. We're talking about from your old address to your new address. You do this with the post office.
A lot of people forget to do this.
Yeah.
You'd be surprised. And, people get really busy in escrow, moving. It's a crazy juggle. And a lot of people forget to forward their mail. I recommend you do this multiple times, because even if you forward your mail, a lot of the times they'll still deliver your mail.
One of the things that Sarah really likes is to tell people to get a big envelope together and have it with either, if it's the apartment manager or whoever bought your old house for your old mail, that will invariably still wind up there.
Right. So you just make it easy for them to just chuck your old mail in there and send it to your new address.
True story. One time, and we'll get into these others. One time I moved out of, this is an LA as heck story. I moved out of an apartment and I left my phone number with the guy who moved into that apartment. And I said, hey, I'm just going to leave my number here. If any mail shows up, if you don't mind, let me know. And he was like, yeah, absolutely. So a couple months goes by. He rings me up and he's like, hey, I've got a bunch of your mail here if you want to come pick it up. I said, okay, great. And so I show up to this apartment and I knock on the door and he's like, oh yeah, I've got your mail right here. And he opens the door and he lets me in. Coming down the stairs of that apartment was Andy Dick.
Oh, really?
It's
You've never told me this story.
100% true story. Andy Dick is coming down the stairs, and I'm picking up my mail, and I look over there, and Andy goes, oh, you're Tanner. And I'm like, yeah. And Andy goes, we've been reading all of your magazines.
That's so random.
Yeah, well, that's an LA story.
That's so LA.
Everyone in LA's got an Andy Dick story.
Oh my God, that's so LA. I love it.
But yeah, get your mail forwarded. Not change your addresses and all your bills and everything, but also get with the post office and set up mail forwarding. They'll do that.
Right. So number 4, we are talking start a house file. Keep a list of the paint colors you choose, home warranties. When you first buy a house, if the appliances are new, often the seller will leave a box with some home warranty information. Fill out the warranty cards. So if an appliance breaks a couple of years from now, they'll already have you on file. Keep a list of the paint colors you've used, maybe some of the samples, or take a picture of the lids. so that you have it in 4 years. You want to touch up the paint in your living room, you remember what the formula was.
Oh, absolutely. I take photos of the lids of all of my paint cans, and I just go into Home Depot and I show them that photo, and they can recreate the exact paint.
It's
awesome.
amazing.
Number 3, you're going to want to change the locks on your house. Sarah, tell them. This is one of your big ones.
Okay, so this is huge. Now, I say before the end of escrow, but really this is immediately as you close. When you're given the keys, I always say to all of my clients, change the locks. You have no idea who has the keys to your house.
Right.
Don't wait until you move all of your valuables into the house to change the locks, because we live in Los Angeles. There is crime. People do break in. You have no idea how many
copies of the old
keys
keys there could be.
Exactly. Old tenants. You have no idea. So change the locks. People, it's crazy. People always delay this. They always wait to do it. And it gives me anxiety. I'm like, please tell me that you have changed the locks. Change all of the locks and get them all key locked the same key.
This next one's related to forwarding your mail because it's also about your utility bills, your cable, all of those things. It takes several days to get that all set up. You don't want to be paying for 2 locations worth of water, gas, electric, and Wi-Fi.
Right. So you want to cancel your old ones for the move-out date and open the new accounts. Also, a lot of this you can do online now, which is nice.
Well, and what's cool is you can put, if you do it online, I think you can set very specific dates. Like if, for instance, I was moving out of an apartment, and so I knew my exact last day. I said, I want this to turn off on this day. And so I did have a little overlap where I was starting to move things into the house, so I needed all of the stuff turned on in the new place, and but I was still living in the old place.
No, it's great. You can go on. Yeah, exactly. Schedule, hey, I know I'm going to be closing next Monday. I'm going to get the keys. So you have your cable, maybe you're doing DirecTV. Some people are doing alarms. You know, they want an alarm system. Have that all set up and just, because when you're moving, you're going to be super busy and maybe a little overwhelmed.
Oh, yeah. You'll be mad. You'll be real mad and frustrated.
Mad crazy or mad angry?
All of them.
All of them. There'll be a lot of emotions.
Look, moving sucks. It does.
Now, if you have a good realtor, she will leave you a case of beer in your refrigerator with a little note that says, I hope this makes packing and unpacking easier.
Yeah. And if you're a first-time buyer, you'll drink that entire case of beer.
And then, number 1, shop for home insurance during escrow.
Do it.
So the kind of something interesting about Los Angeles is there's pockets of LA that are considered high fire zones. Where I live in Mount Washington, there's a lot of brush. Yeah. And a lot of insurance companies no longer cover us. So finding insurance companies, it's fine. You can get insurance, but it's a little bit of a pain in the ass. You got to make calls. You also want to shop for prices. So do that ahead of time. Don't leave that till the end of escrow. You're going to need insurance. They're gonna need it before we close.
They're going to ask you for your insurance account and information. It's one of those things you have to have before it closes.
Absolutely. So do it ahead of time. Be proactive, my friend.
Do it.
Thank you so much for listening to another episode of the LA Real Estate Podcast. I'm your host, Sarah Skelton. Here with you, as always, is
Tanner Thomason.
He is so... I don't know if you've seen his face. Maybe you could see a picture of him online. He's super pretty.
Thank you. Wow.
So handsome.
I'll take it.
Yeah.
I'll take it.
And a nice guy.
Thank you.
Super nice guy.
You're pretty, Sarah.
Oh,
You're pretty and very nice as well.
Oh, I love it. Well, thanks for joining us. We're going to have lots more episodes with lots more topics, but it's been fun. So we'll catch you guys next time. Dun, da, da, da.